Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi Singh. Welcome to another edition of our weekly podcast. Global equities remain under pressure amid rising bond yields as investors paid aggressive rate cut expectations upon the release of strong economic data from the US. Asian equities were dragged lower by aggressive foreign investor sell-offs after Chinese Q4 GDP growth data, retail sales, and housing data underwhelmed the markets. Hong Kong and Korean equities fell the most. The US equities, however, staged a strong comeback on Friday with strong gains from large technology companies, finally pushing the main US equity benchmark to a new record after a shaky start to the year. Back home, Indian equities consolidated after peaking towards the year-end. After reaching a new all-time high on Monday, the Nifty index retreated 1.2% for the week ending Friday amid weak global cues, profit booking, and a sharp foreign investor sell-off in a large financial sector benchmark heavyweight. Broader markets performance was mixed this week, with the Nifty Mid-Cap Index up 0.4%, while the Nifty Small Cap Index was down 0.4%. Among the sectors, IT and capital goods led the winners with gains of over 1.5%, while utilities and banks led the losers with cuts of over 2.5%. The Indian fixed income market came under pressure later in the week. After declining at the start of the week, Indian government bond yields edged higher amid rising US bond yields as most major central banks, including the RBI, pushed back against aggressive rate cut expectations and reiterated a cautionary, data-dependent approach to monetary policy setting. Bond yields across the curve closed flat, with the 10-year Indian government bond yield closing at 7.18%. The INR fell 0.2% over the past week to close at 83.1 per dollar amid rising US bond yields, stronger US dollar, and foreign investor outflows. The INR gold fell 0.3% as US bond yields rose. Brent crude oil recorded a gain of 1% over the week to close at $79 per barrel after the International Energy Agency joined OPEC in forecasting strong growth in global oil demand, while the US reported a big weekly draw in crude oil inventories. Among the macro updates, the first was on India's wholesale price index, which rose 0.73% year-on-year in December 2023, below market estimates of a 0.9% increase and a 0.26% increase recorded in the previous month. It was the second straight month of increase in wholesale prices due to faster rises in prices of food and primary articles amid a softer drop in fuel prices. On a monthly basis, wholesale prices contracted 0.85% in December, reversing a downwardly revised 0.26% growth in the month of November. The second data was on India's trade deficit, which narrowed to USD 19.8 billion in December of 2023. This was lower than a deficit of USD 20.6 billion recorded in the previous month and market expectations of USD 21 billion. Exports rose by 1% to USD 38.5 billion, while imports experienced a 4.7% decline to USD 58.3 billion. Third data was on India's industrial production growth, which moderated to about 2.4% year-on-year in the month of November 2023, making it the lowest reading since March last year and lower than 11.6% growth in the previous month. Output decelerated sharply across all key sectors, manufacturing recording a growth of 1.2%, mining at 6.8%, and electricity at 5.8%. Considering the period of April to November period, the industrial production rose by 6.4% year-on-year. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.